Hello, and welcome to the special session by Outlook Money, where we help you simplify your investment options and understand their pros and cons to help you make a smarter choice. The small cap segment has shown remarkable growth in the recent years. The small cap stocks witnessed a rally in 2024, which is evident from the 19% surge witnessed in the Nifty Small Cap 500 index. Now, over the period of past 5 years, the index has rallied 125.84%. This trend makes small cap funds an attractive investment option for investors who are seeking for long-term returns. I am Priyanka Debnath, and today we're going to explore the world of opportunities and risks in the small cap funds. For today's discussion, I have with us Mr. Vaibhav Shah, the Head of Business Development Strategy and International Sales at Mirai Asset Investment Managers India Private Limited, who will shed light on the strategies to invest in small cap funds. Mr. Vaibhav B. Shah has more than 20 years of experience in the field of financial services and stock markets. He is a qualified CA, MMS in finance, and a certified financial planner. Good afternoon, sir, and welcome to the special session.
Yeah, thanks, Priyanka, for calling us for this sort of session.
Thank you, sir. So today we were talking about the small cap funds and how a new investor or any investor should start. What should their strategy be in order to invest in those funds? So could you shed light on what are the small cap funds and how do they differ from large cap or mid cap funds?
Sure. So, Priyanka, you raised a very important thing. Like you said, the last couple of years or maybe 5 years, small cap has been an index which has done phenomenally well. So, let us try and understand what is sort of small cap. So, in the Indian mutual fund industry, the top 100 companies by market capitalization are called as large cap stocks. Stocks from 101 to 250 by market capitalization are called as mid cap stocks. And stocks which are from 251 to 500 in market capitalization are called as small cap stocks. And then you have stocks, below 500 in market cap, which are sort of called as micro cap stocks.
Okay.
So India has about 5,000 odd listed companies. The idea of a small cap fund is to predominantly invest maybe at least 65% of its corpus in companies which are small in size, which is between 251 to 500, or it gives the manager and the fund flexibility to invest a mix of its portfolio in also micro cap, mid cap, and large cap stocks. So the idea is to participate in the India growth story, but predominantly in companies which are as defined between 251 to 500 in size.
So could you say, as we have seen that these small cap funds mostly offer higher returns, but at the same time, they come with greater risks. So, how
Sure.
would you say an investor could allocate their portfolio or incorporate balance in their portfolio to minimize the risk in their corpus or portfolio?
So, Priyanka, good question that you asked. Actually, if you were to see that the AUM in the banking system is maybe 5 times the AUM that is there on the mutual fund system from retail investors. So investors usually don't only want higher returns, they want to get a good mix of risk and returns while sort of making the investments. Now, what happens with small cap fund is usually investors perceive it to be sort of more volatile, which is partly true because these are not as large companies in size as maybe some of the other companies, which large cap stocks, which are companies with a proven track record for long periods of time and have larger market capitalization. But small cap stocks can also be some of the leading companies in India. So, India, if you were to see in India, there are at least maybe 15, 20 sectors where the leading company in India is not a large cap stock or a mid cap stock, it's actually a small cap stock. And these are leaders in their own respective segment. So, some of these companies, though they are by size maybe small, the opportunity that they represent is sort of large. To ensure that you get the best return and risk matrix, I know what investors need to do is get their time when they invest, right? Right. So most important risk comes in small cap when you sort of want to chase past returns and say, this index, like you said, in the last 3 years, 5 years has generated X amount of return. and people think now I should invest in small cap. I think so. You should have a certain percentage allocation to small caps because they represent a very important part of the economy. They represent many sectors which are underrepresented in large and mid caps. Um, but you should not go overboard in how much you allocate to small caps, especially during bull markets when you tend to sort of chase returns. We've seen that the small cap index has been there for the last 20 years. The Nifty Small Cap 250 index over almost 20-year period has generated 17-18% sort of return.
Right.
Uh, if you were to look at magical number that we say 72 divided by R, which helps you know how many years your money doubles, the small cap index has effectively doubled every 4 years, which is a large sort of compounding that the index has created.
Right.
So what we've seen is Nifty over the Nifty and Sensex has been there for more than 40 years, has generated about 14.5, 15% return. Mid cap index helps generate 1.5% return higher than sort of large cap stocks, and small caps can generate another 1.5% higher than sort of the mid cap small stocks. So your returns are higher, albeit with little more volatility. To reduce that volatility, you should sort of increase your time frame for investing. So if you invest in large cap stocks for 3 years, maybe your time frame for investing in mid cap should be about 4 or 5 years, and small cap should be 5 to 7 years. And that's how, if you manage your sort of time frame right, volatility doesn't become your enemy; it becomes your friend, and your experience in investing becomes much better.
Right. So as far as I can understand, so the strategy is to look at the time frame and very mindful of the time, and also obviously diversify your portfolio, which is how you mitigate the risk. Right. So
Sure.
um could I mean do you think SIP or the systematic uh, investments they can be leveraged for small cap funds?
So Priyanka, you brought a very important point. So, all of us know that compounding is called the eighth wonder of the world.
Yeah.
In my books, I think so SIP is the ninth wonder of the world. The reason being, what SIP does is that it first removes the greed and fear from investors' mind, right? So there's a very beautiful saying from Warren Buffett, and he says that, be greedy when people are fearful, and be fearful when people are sort of greedy. So maybe 2023-24 was a year that people are a lot of greedy. And that's a time maybe you should have been slightly more fearful and booked more profits. This is a year, 2025 has started in a year where now people have started becoming fearful. Maybe that's a time to become greedy and maybe add to your holdings. But what SIP does, it gets you away from this entire thought of greed and fear, because every month you are deciding to invest a particular amount of money, and that money gets sort of debited from your bank account. If markets are higher, you will buy less units. If markets go down, you sort of buy more units. And that discipline of buying on every dip helps you sort of create a better experience. So we've seen that if your holding period is long and markets are sort of more volatile and they see a correction before the rally, SIPs have tend to outperform lump sum returns uh, in a meaningful manner. That's again because they bring the discipline approach of investing. And investors should just be very careful when they start SIPs. Uh, they should create a goal when they do the SIP, right? Otherwise, what happens, investors after 1 or 2 years or 3 years will say, let me redeem and stop my SIP. So if you can link your investments with a goal, and you can say, I'm planning for my kids' education, and that is 10, 15 years away from now. And I think so small cap is a decent or a good way to sort of plan for my kids' education. So you create an SIP which is for a time frame of 10 years, 15 years, with a clear goal. In between, if sort of markets go up or down, it should not affect you because your goal is 10, 15 years back later. uh, you have to get the requisite corpus to ensure that the kid is educated. You can't leave him halfway, right? Educated. So you have to ensure that if you link your SIP with a goal, it gives you sort of good experience. And I would always believe that SIP is actually the best way you should invest in sort of small caps. You should do lump sum when markets correct, maybe like now, but you should always continue your SIP investments for long periods.
Would you recommend investing in SIP for a new investor who has just started investing? Would you recommend them SIP?
No, no, absolutely, Priyanka. So, like we said, the advantages SIP gives is of discipline. Now, anyone who's a first time or a new investor, uh, he will only make more additional investments if his first experience of investing is good. To ensure that his initial experience of investing is good, you have to ensure that time, in the market or when you enter the market should not be sort of more important. Uh, the time spent in the market is sort of more important. Like we always say, timing the market is sort of not important. Time in the market is more important. So when you start your journey through an SIP mode, you get the discipline of investing. You you ensure that you invest for long periods of time, and once your experience becomes sort of good, that will give you confidence to start making lump sum investments as well. So I would believe that anyone who's starting their investment experience, definitely they should start the SIP route. And small cap remains a beautiful opportunity, especially for young people, right? I think so they have in front of them next 10, 20 years. And I believe if you were to see how the way Indian economy is and the demographics of India, India has a population of 140 crore people, an average age of 27 years, the youngest working population in the world for the next 20 years. So the Indian economy, as per IMF, World Bank, and other sort of institutes, will become one of the largest economies over the next maybe 20, 25 years. And if that were to happen, some of the small cap companies in India will also become very large companies in size as the economy becomes much bigger in size. So, with someone who's young, wanting to start with SIP, start doing small caps and mid caps, and you will see a significant growth in the way your investments will fold with a long time frame.
Right. So let's say I am a new investor and there are a wide range of small cap funds available in the market. So what should I invest in? How should I choose among the wide variety available? What should be the what should be the best small cap fund for me?
So, yes, best small cap fund necessarily doesn't mean the fund which gives the highest return, right? Because it's a very famous saying in mutual funds, offer documents or presentations, that past performance may or may not sustain, right? Which I think all investors should be very mindful. Uh, Investors tend to be return chasers. They see the last 6 months, 12 months, whoever has done the best, assume that a sort of will continue. What you need to actually do is to check consistency and the ability of the fund manager and the fund house to manage funds across various market cycles. So markets go through various cycles of bull phase, bear phase, phases where sort of markets does nothing for long periods of time. So you want to see a manager who's been able to manage money effectively across all those stages, across the good and the bad days. And if the consistency is there from the investment process that the fund house has created, that should give confidence to the investor that they should start deploying their money. Now, a lot of fund houses may come out with new funds or new offerings. In that case, I think so because the fund is new, it doesn't mean that you should not allocate and should wait for you, for that fund to create maybe a 5 year, 10 year track record. If you see that the underlying fund manager and the fund house has a proven track record in some of the other schemes and strategies which they have created, that can also give you a confidence that they are someone who has a credible track record, have the expertise to manage investors' money. So I would believe investors should do a little bit homework to see past track record. They should see also risk ratios to figure out what is the risk taken to deliver the returns. So if you're taking undue risk to deliver higher returns, it could also work negatively, especially when markets sort of correct. Investors should take help of advisors to also help them in financial planning and choosing a mix of portfolios. I never believe you should buy one fund. You should have a portfolio approach, even in small cap, so that even if one fund doesn't do sort of that well, the other sort of funds can help compensate it, and maybe an advisor can help. Webinars like this are very helpful to understand basics of investing and the method that they should sort of approach. I would say all of this is very, very important for investors to make an informed decision. I always keep saying money making is not easy. It's a tough thing. And when it comes to your investing, make sure you make the most of it. So take informed decisions, do your homework, and your experience will sort of be much better.
And also take advices from professionals whenever
Ab-
necessary, because for young investors like me who have just started investing, we don't know much about the market. So we have just started reading, and not all the influencers would help every time. So I think for myself, taking a financial advisor's help would always be helpful. Right.
No, absolutely. I agree with you.
So, okay, so as we have seen, the small cap fund doing very well, as it has rallied itself from 2019 to 2024. What, according to you, are the reasons for the rally?
See, in markets, investors usually look at returns. But the most important thing to see in market is not returns. It is actually the earnings growth of the companies that you invest in. So the small cap index over the last 5 years has seen an earnings growth for the index which is more than 4 times, which means that the index itself has grown so much from an earning perspective. And because the earnings growth of the index has been so strong, it would naturally translate to better sort of returns and experience for investors. So most important element that investors should always look at is the earnings growth of companies. Can they continue to grow at a faster speed, or uh, at a speed which can ensure that your return expectations are met? Also, there are phases that people tend to overpay for this. So I am myself a Gujarati. I always believe in value investing, paying, maybe $70 for $100 thing. So always like to buy a thing in the bargain. So when you do your analysis, try and see for these funds or the stocks that I invest in, am I overpaying too much? So if the P of the stocks is high and the earnings growth is not there, then sort of you should avoid investing. uh, you should invest in some other segments of the market. So that sort of decision making has to be done by investors to look at the earnings growth. And that sort of, I know, is a slightly complex thing for retail investors to do. So what they should do is maybe follow markets, maybe hear a little bit commentary on markets to understand valuations and the earnings of markets to do the informed decision. And like you had rightly said, take help of advisors. They will sort of guide you on which segment looks sort of more attractive. And see, when it comes to market, even if small cap has sort of given you high returns in the past, what is required is a right mix between large cap, mid cap, small cap, certain themes and sectors to give you the right representation of markets. Just because one segment has sort of done very well, it doesn't mean that you sort of only invest in that segment. This is what we've seen in India, slightly herd mentality that if small cap does well, gets a lot of money, and people chase returns, and when their expectations are sort of not met, you would tend to see sort of corrections happening in market. So try and allocate your money across all segments. And if your time frame and mind frame is longer, then sort of your, I would say, experience is much better.
So, what is your future outlook for small cap funds?
So we are in that place that, like I said, 2025 has started slightly on a jittery note for the last maybe 3, 4 months. We've seen a correction in market. Again, quoting Warren Buffett, he always says that uh, market corrections are friends of future potential investors. So if you are an investor who wants to buy markets and invest your money in stocks or in mutual funds, you should be happy when the market corrects because it gives you a better entry point, right? So I think so. What we've done, what we've seen over the last 3, 4 months is sort of a correction in prices. Stocks have sort of corrected 10, 15, 20%. Um, that means you're sort of being able to buy some of these businesses cheaper. Uh, like I said, the demographics of India are very strong with a young sort of population, a highest working population in the world, youngest consumer population in the world. India, from a GDP perspective, even with 6.5% growth, will sort of lead the world growth, I would say, and we will be the engine of world's growth. So India will continue to maybe grow at 2 times of the world growth rate. So the outlook on India with a very long-term perspective remains sort of quite positive. In that environment, if the earnings growth of Indian companies also continue to be good, such corrections should be used as an opportunity to add to your existing holdings so investors can add more sort of money through the lump sum route and, of course, continue their SIPs. So they should continue their SIP investments, but whenever the market correction is high, sort of add with lump sum investments as well. Overall, the outlook for India as an economy, as a country, is very positive. And hence, if you create the right mix of large, mid, small, the experience will be very good.
So, with the small cap funds rallying in the recent years, what are some signs investors should look out for to assess if the segment is overheating?
Now, Priyanka, you brought a very brilliant point that how do you, as a retail investor, know? Like I said, earnings and all is very complex for people to know. I can say the only way that you can figure out if the segment is overeating is that you go to any party or for a dinner or any other place, and the only thing that people are talking about is stocks, right? And people who have no financial acumen also saying, I bought this stock and it's up 20% in the last 1 month, and I have invested sort of X money. You can figure out that there is some sort of danger sign visible. See, investing is a very disciplined way to create wealth. It's not that you are, punting on something and you want, to double your money in maybe 3 months, 6 months, or in the next 1 week, you want the results to happen. So when you can see a lot of noise where uh, people's discussions on markets have gone up, people are talking about how they've made money in markets, and people who are never risky or never ready to take risk actually plunging into market and saying, oh, my neighbor has sort of bought a new car by investing in stock market, or he's gone on this vacation just because he made money in stock market, and they themselves start taking risk. It means maybe too much hot money is coming into the market. It's a clear danger sign, and I think so at that time maybe you can take some money off from the table, keep your asset allocation mix right, but good time to book profits. Maybe that time was there in 2024, sometime during 2024. Maybe that seems that 2025 might be a sort of different year than what we had seen in the past year.
Right. So, do you think the rally will continue in 2025 as well?
Very difficult to say whether it will continue in 2025, but like I said, if your time frame and mind frame of investing in India is 3 5 years and above, I think so. Indian markets will be one of the better markets to invest because of the growth, the demographics, and the opportunity which is there. And India being a more domestic oriented economy gives you a lot of companies the opportunity to enter into new business lines. We are seeing that India is again a country of entrepreneurs. Uh, a lot of us like to try new business ideas, and as the number of companies are getting listed more and more every year through IPOs, and most of these companies actually start small before they become very large. India being a land of entrepreneurs, this sort of growth trajectory should continue. So I would hope after the correction, 2025 might be a better period, then maybe end of 2024, you will have a better experience. But if your time frame has to be at least 3 5 years for you to sort of be very uh, having a sort of an excellent experience in market, because you need that time frame for markets to do well.
Okay, sir, I have asked all the questions that I had, and thank you so much for being here. Thank you so much for
Yeah.
helping us with the insights which were very helpful for every kind of investor, be them young or be them like old in the market as well. So thank you so much, sir. Thank you.
Yeah, thank you. And I would say keep hearing webinars, attending, reading blogs, educating yourself, and publications like Outlook are excellent ways for you to understand more about finance. So keep continuing this practice, and I'm sure wealth creation would happen for someone who follows that discipline.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.